So thanks for joining this lunch and learn that we are able to offer today. We're really excited to bring this content to you. I think it's a really incredibly valuable topic. So by way of background, we're joined today by Keith Harvey, Brian Murray, and Pat Murphy, who all are from Heartland. And Heartland is Chelsea Groton's partner, longtime partner for both merchant services, so credit card processing, as well as more recently on the payroll as a payroll provider, and our partner being able to provide our business customers with payroll services. And so one of the things that, and I'll let them give a little bit of the background, comes straight from the horse's mouth in terms of a little bit of background about Heartland, but they've been a wonderful partner for Chelsea Groton to be able to provide these extended services to our customers. And by bringing the payroll on board, one of the key components that we've started discussing through Heartland's recommendation is a lot of the tax credits that are available to business owners that they might not necessarily be aware of and might not necessarily know all of the different reporting capabilities that need to be really leveraged in order to be able to apply for some of these credits. So we thought, given, everybody wants to try to get their fair share of money where it's available, we thought this would be a great topic to provide as a lunch and learn, and potentially learn something new and find out some information that might help the bottom line of your business. So without further ado, you don't want to hear me go on and on. You want to hear from them directly. So on this important topic, so I'm going to turn it over to our friends at Heartland to kind of dive into these details. So thanks for joining.
Great. Thank you very much, Alexis. And thank you to all of you who have joined. This is a great sized crowd here, so we really appreciate you all taking time out of your busy schedules to join us. So my name is Pat Murphy. I'm Director of Business Development here at Heartland, joined by Brian Murray, our Division Manager, Keith Harvey, our Senior Product Advisor, and we team up to bring Heartland's products and services to the business customers of Chelsea Groton Bank. So Alexis, I'll do a quick screen share here and get my colorful PowerPoint up here. Everybody can see that all right? So just a little bit about us first is that, as Alexis mentioned, we've been partnering with Chelsea Groton Bank for many years and help bring a wide range of payments and payroll products to services to customers of Chelsea Groton. So we are a full service payroll processor. We own all our network and all of our products and services. So we're not a reseller of any other company like that. So when you're working with Heartland, you're using Heartland software, you're working with Heartland people, and we provide the full experience to you. So we provide all the tools to help business owners get their employees paid in a wide range of ways. We can do it pretty much any way a business wants to, whether it's 100% all electronic with direct deposit using our website, and the employees have access to an app with all their information. We can do it completely electronic, or we can do it as archaic as maybe your business might want to be, providing paper checks, have those delivered to your office as well. So wide range of payroll solutions, all the tax and compliance systems that go along with it, but also some other add-on features such as a complete line of HR solutions to help primarily small to medium-sized businesses that might not have the resource and the expertise in HR. So you can make sure that you're providing a good experience for your employees. We do timekeeping, time and attendance, online scheduling tools, again, make for a positive experience for your employees and give your business all the information that it needs. With payroll, payroll data has to integrate in all types of different directions. So we integrate with 401k systems, point of sale systems, other time and attendance solutions that a business might be using, and also workers' comp. And a big part of our business that has really gained a lot of traction lately is our recruiting software and new employee onboarding software to help business owners attract new candidates and make a smooth experience for them when they're going through the application process. So we're going to get right to the topic at hand that you're all joined this call for, and that's on tax credits. And we can help business owners identify and get qualified for a significant amount of tax credits that can really help your bottom line. And the reason why Alexis asked us to join us here is a lot of business owners might not be aware of it and might not be taking advantage of it. And there's some big ones out there that have a deadline coming up, so it's pretty urgent. And again, very glad you're here. So three of the ones that we're going to address today is the work opportunity tax credit, the FICA tip credit, and the employee retention credit. And that's the one that is probably most critical at this point. A large infusion of cash that's available to your business, and that does have a deadline of next year. So I am going to turn it over to my colleague Keith, and he's going to tell you first about the work opportunity tax credit. And before we do that, just want to let you know, if anybody has any questions along the way, you can certainly enter them into the chat, and we can answer them. We'll stop every couple of minutes or so to see if anybody has any questions they want to speak up for. So feel free to ask any questions at any time. So Keith, I'll turn things over to you.
Thanks, Pat. Appreciate it. And thank you, Alexis and Chelsea Grottman Bank, for having me on here and giving me the ability to speak to all of you. And thank you also for your time and joining the call. So just to give you a real quick background on myself, I've been with Heartland in the payroll HR side for 5 years. And prior to that, I had 11 years in the financial services industry. So just a little bit on my background and where I've come from. But I'll get right into it here with the work opportunity tax credit, or short WOTC. So as you see here, there's some individuals that qualify for this tax credit. Military veterans, people on SNAP benefits, ex-felons, if you live in a certain demographic. This is a topic that I bring up with basically every single client I meet with, and they either never heard of it or have heard of it, but just the process to figure out what they may be eligible for or how to get it is just too complicated. So it is a program that's actually been around since I believe like the late 80s. So it has been around a long time, but it is a credit that a lot of businesses aren't taking advantage of for what I mentioned before. It can be time consuming or just difficult to figure out how to actually get the credit, right? So what you want to do is make sure that you have some type of system in place to screen for this credit. The way you get the credit is going to be on newly hired employees. So it's not something you're able to retroactively go back and look at your current staff and try to take advantage of the credit. It's something that you do need to take advantage of when they're being hired. You have 28 days from their hire date in order to actually screen and submit the forms that need to be submitted to start the process, right? So again, the most important thing is actually being aware that the program's out there and having some type of program in place to screen for it in order to, again, make sure you can submit the forms on time to get the credit. Now you'll see there the $9,600. That's the maximum credit. It ranges anywhere from $2,400 to that maximum of $9,600. And it all is going to depend on those different categories that the employee falls into. It's also going to take into account what their actual earnings are, how many hours they worked, the length of time they've been employed. So again, there's a lot of detail that goes into it and actually can take a while to get the credits. So again, the most important thing is actually having something in place to be able to screen for these. Now, another question people have is how many employees could qualify for this credit? You're going to see different numbers out there. From the information we have, it's around 25% of employees that will qualify for this credit. So, think about your business or businesses that you work with. What's their turnover like in the course of a year, right? So even with just 4 people, if you are bringing on 4 people or your turnover is 4 employees through the course of the year, it's safe to assume that one of those will most likely qualify for one of these credits, right? And again, that $2,400 to $9,600 credit, can add up over time for sure. Again, depending on the turnover and depending on how many people may qualify. So Pat, I think we have a couple slides on this. These are just kind of showing tax credit assessment. So I'm sure we've all applied for jobs, even if you are business owners out there, or put a job application together, right? Some of the questions it'll ask you is, are you a veteran? Have you been convicted of a felony? So these are just some of those screening questions that are asked through the program to see if the potential new hire may be somebody that qualifies for these tax credits. And then at that stage, if it is something that they qualify for, then you need to get more information out to them to get a little more detail about their current situation, to really see which of the credits within the work opportunity tax credit that'd be eligible for, or the dollar amount that they would be potentially eligible for. And just to be clear, this is a tax credit to the business. That's another question that I get asked is, oh, the employer new hire gets this credit. No, it's for the business. To sum it up, it's basically the government saying, hey, people that fall into these categories sometimes find it hard to find employment. So as a thank you to Mr. or Mrs. Business Owner, here's a tax credit for you for hiring these employees. That's the main concept or the reasoning behind why this tax credit is out there. And then I think that next screen, Pat, was just showing a couple, kind of showing you the form of what's actually submitted.
Yeah, and before we get to that, Keith, one of the things to be clear of is that a business owner, you had mentioned, Keith, that sometimes businesses don't take advantage of work opportunity tax credit because it's pretty time consuming. And if they're doing payroll on their own, or maybe just having a bookkeeper do their payroll, they might not have the resources available in order to track the applicants, take care of that assessment, and get all that documentation in. But a business owner should be working with a full service payroll company in order to have the resources to take advantage of this without taking up a lot of time, correct?
Yeah, absolutely. I mean, again, you have that 28-day window from their hire date or start date. So right there, you have a short time frame to even apply and submit what needs to be submitted to start that process. So yeah, you definitely want to have a system or a program in place that, one, can screen for it, two, can have the form submitted for you, but then three, as Pat was mentioning, how the amount of time that it can take to go through from starting the process to the actual ending process, it can be months. Again, you're tracking how much the employee is being paid, how many hours they're working. So yeah, there is a lot of time that can go into it. And again, why most businesses that I've spoken to don't take advantage of it if they don't have something in place, because at that point, it's not worth their time. It's not going to be worth the credit for the hours that they'll probably spend working on it to figure it out.
Great. Thanks, Heath. We'll pause for a quick second. Does anybody have any questions when it comes to the work opportunity tax credit? Any parts of it? Okay, great. Well, again, if anything comes,
Pat, I'll jump in on one thing to point out that may not have come off totally clear on this. What's really important about this tax credit is there's a lot of misinformation in the marketplace as to how to go about and get it. Typical business owner is going to say, I'm going to rely on my CPA for this type of information. The problem with that is not that the CPA is not capable, but they're not there when they're making the hiring decisions or hiring their employees. They're there after the fact. So this is a really important thing, that they have to have something in place prior to the hiring of an individual so that they can work through that 28-day process that Keith talked about in order to take advantage of it. So just wanted to point that out, because a lot of the misinformation that's out there leads people to not taking advantage of a great way to save a bunch of money for their business.
Yeah, so I do see a question here. So the program doesn't expire, the main deadline or time frame to pay attention to again is that 28 days from hire date. So again, you can't retroactively take advantage of the program and you know, oh, I have a bunch of veterans, or you know, I help out with people that have been felons, convicted of felony. You can't go back and take advantage of it. So again, the program's out there. There's no expiration date on the program, but it's just that 28-day window from when they start that you really want to pay attention to.
Great, thanks, Steve. Okay,
Yeah.
so now we want to talk about the FICA tip credit for anybody in the hospitality industry. This is very important, can make a big difference in your business. And Brian, I believe you're going to tell us about that.
Yeah, absolutely, Pat. This is one of my favorite tax credits that's actually been available since the Reagan era, as has WOTC, or Work Opportunity Tax Credit. And they were put in place for a reason, not just to help the business owner, but also to help the government collect taxes in a correct way. Back in that time when this came out, restaurant and hospitality industry where tips are paid often would be a cash-based industry, and it was hard for the government to collect taxes. So they put sort of a reward and a penalty system in place to make that happen. So one, it's really important to understand that all tips reported are subject to taxes. The business owner would have to pay in both Social Security and Medicare from what gets withheld from the employee's check and match that on their side for all wages paid. This credit in now currently called the FICA tip tax credit, otherwise known as the credit on a portion of employer Social Security and Medicare, actually, sorry, the screen's a little bit off on that, paid in on cash tips. So it actually applies to cash and credit tips that are paid. But since that change since the 80s to where we are today, where credit is much more prevalent when you go out to pay for your meals, a lot of that stuff becomes trackable and reportable, and the numbers have gone up with the amount of money that comes back to the business owner for doing so, because the reporting has become more accurate, if you will. There's less people not reporting their tips because it's kind of hard to do when they're getting paid out at a statement at the end of the night. So the purpose of this is to help the employers get some relief on the taxes that are paid in from a patron. At a meal, I paid the employee. The employer was paying in the matching taxes on that, and this gives them the ability to get that credit back. So, I think we might have another screen after this. This gives you sort of an idea and some numbers to look at as to what that might relate to a business owner. I can tell you this, having used this to help business owners since when I first started in payroll somewhere around 1994. It's a little bit after it came out. Don't like dating myself that far back, but it's been a very valuable tool to help restaurants and business owners take advantage of credits and infuse money into their business that they otherwise wouldn't have. If I met and presented with a business owner, we would look through at the amount of employees that they tipped. And I can tell you a typical restaurant, medium size with say 17 wait staff, is going to save about $22,000 a year in their taxes that they're going to receive back to the business owners. This isn't something that goes to the employee. They have to pay the tax in, which it equals 7.65% to those that might be reading the screens on trying to get some math in there of the employer portion of taxes. They pay that tax in. Oftentimes, very oftentimes, even today, the business owners do not take advantage of this. Again, because of a lack of education and understanding on how to do it. In the CPA community, for the most part, there are those that do fully understand this and utilize it, but not many specifically focus on the restaurant and hospitality industry. So it's really great when I'm able to educate and bring that knowledge to them, because here is a whole bunch of money for you that you didn't realize you had. Have a very happy customer at that point. So what happens is each employee reports in their tips, business owner pays on all of their gross wages. And then at the end of the year, we or whoever would be doing this for them would track the tips to minimum. So minimum wage has increased in a lot of states above federal minimum wage, even for wait staff. So now they're making enough money that almost all of the wages that they get in tips are subject to this. Trying not to complicate it too much and go into too many details on it and confuse everybody, but the FICA tip tax credit is one of the most valuable things to a restaurant specific, hospitality specific industry. I often get questions about, well, I have a hair salon. We get tips regularly too. Can I qualify for this? The answer is no. Specific for the food and beverage industry. Okay. Why they don't get that, I don't understand. We should get that too, but I don't write the laws. So with this, the typical calculation works out. Average wait staff worker will work 30 to 35 hours in a week. And the amount in, Pat, I know you put this slide together for the math on me for examples. I'm just going to veer off from that a little bit and use my knowledge. At the end of the week, that person has worked enough hours. And at the end of the year, when you summarized how much that employee has gotten back in that credit for the business owner, it equals typically about $1,100 on the average wait staff amount of hours they work, amount of tips that get reported. If they're a higher end restaurant, it's a higher dollar amount. If they have more employees and more hours, it's a higher dollar amount. If they have less, maybe it's quick serve, that amount reduces. But at the end of the day, it's money that's very important to this business owner. And the ways to capture it is through proper tip reporting and filing for this with conjunction with a payroll company, payroll provider, bookkeeper, and their CPA at the end of the year. Pat's flipping over to the next tax credit, which I think, Pat, you're on mute.
Sorry, I jumped slides, but anything else when it comes to the FICA tip credit?
No, it's okay. It's just a really exciting tax credit that's very much unknown by the restaurant industry. I'm often opening up their eyes to this, and they're very thankful. They think they're getting it, but they don't when we talk about the details. So it's really important extra money infused to their business. This being my favorite one, I think we're going to let Keith talk about it. This one has an expiration date.
Yeah, thanks. And I'm guessing this is probably going to generate the most interest or the most questions. So the employee retention credit, this is a program that started or came about due to COVID. And I'm sure most, if not all of us on the call, were aware of the PPP loans. And there were two waves of that people could get. This was another program that actually came out at the same time, but originally the government said you could do either the PPP loans or the employee retention credit. Then as some time went on, they changed it and said, okay, you can do the PPP loan and the employee retention credit. You just can't use those credits on the same payroll funds. So that's where it gets a little tricky. But I'll back up and explain exactly or high level of what the employee retention credit is. There's two ways to qualify. So it's one or the other. It's not both. One way to qualify is if you were under any type of government restrictions, whether it be federally, state, or locally, right? So again, we've talked a little bit about restaurants, gyms, salons. These are all places that had capacity restrictions. So that's one way to qualify. The other way you would qualify is if you had a reduction in gross receipts. What you would need to do is compare quarters, kind of pre-COVID quarters to COVID quarters. Now, it was different in 2020 from 2021. So in 2020, you would need to show gross receipts less than or a reduction of 50% if you're looking at a quarter in 2019 to a quarter in 2020. If you were looking in 2021, you would compare those 2021 quarters to the 2019 quarters. Again, it wants to compare it to pre-COVID quarters, but the reduction in gross receipts would only need to be 20% in that scenario. So those are the two ways to qualify. As far as how much you can get as a tax credit, It's actually up to, because some of these things change. It's $26,000 per employee. And the way you come up with that figure is for 2020, you're potentially able to get a $5,000 tax credit per employee for the year. And in 2021, you could potentially get a $7,000 tax credit per employee per quarter. And the program ran from, or the program was Q1, Q2, and Q3 of 2021. That's why it's the $21,000 amount for 2021. I'll pause there because I kind of spit out a lot of information and numbers, and people may have questions with that. And I do see some in the chat. So I see one asking about it expired in the fall of 2021. Correct. So it was September 30th of 2021 of the period that you're able to take the credit. Applying for the credit is different. So for 2020, if you're applying for the credit in 2020, you actually have until April of 2024 to apply for that credit. If you're applying for a credit from 2021, you have until April of 2025 to get that credit. To finish your question though, April, yes, if you've taken advantage of the retention credit for those qualifying reasons or that qualifying time period, yes, there wasn't anything additional with the program that you'd be able to take. One caveat with that is if you were a new business that opened after February, I believe it was February 15th. I can get that exact date for everybody after. And your average gross receipts are less than or were less than $1 million, then variation of this program called the startup recovery, you actually could go into the fourth quarter of 2021 to qualify. And in that scenario, the only thing you need to do to qualify is be open after that date in less than $1 million. The restrictions don't apply, and the reduction of gross receipts wouldn't need to apply either. All right, so I hope that answered your question, April, with a little more info on top of it. I do see a question from Mandy. Okay, that looks like it's in regards to the work opportunity tax credit. And I did see another question on that as well. So I'll hold those off until the end. I just wanted to stay with the retention credit. If anybody else has questions there before I give a little more info on that.
Keith, I know that a lot of industries are eligible for the employee retention credit, but what are some of the ones that you've helped most often?
Yeah, the three I mentioned before, and the reason being is that before I even have a conversation with them, I know there's going to be something available for them. So again, restaurants, salons, and gyms. We know in the state of Connecticut that they were under capacity restrictions from March 13th of 2020 to May 19th or 20th of 2021. So what you need to do is you need to look at the payroll reports. So this again is another reason why you want to be working with a payroll company or having a payroll system that really has good reports to be able to break this down, because you do need to look at the quarterly earnings per employee to figure that out. And the other thing you need to do, going back to the comment about the PPP loans, you need to look at when they received the PPP loans, how much the PPP loan was for, and if it was forgiven, how much of that loan, the PPP loan, was allocated for payroll wages, because you need to back those out as well. You'll see on the slide there, our average client has received $85,000 tax credit from this employee retention credit. I'll say from my experience, a kind of a unofficial figure that I've noticed is pretty close when I'm working with clients is even if they receive both PPP loans, that employee retention credit is coming in very close to that amount. I don't know if there's any actual reason, or I don't have any official data on that. But that's what I've found out with working with my clients. So again, any businesses out there that have gotten the credit, or if you worked with any business and know what they received for the PPP loan, I'd feel fairly safe that that could be an amount available to them.
And just to give you a range of some of the ones that we've come across, a lot of full service restaurants are coming in at about $400,000 back to their business. We've seen quite a few nonprofits and churches, and they've come in around $75,000. And I can't think of any nonprofit that's not looking for money. So certainly a good reason to talk to Keith. Also, hotels upwards of $1 million in credit back from the IRS for this. So a lot of options. And as I mentioned before, so many businesses just haven't taken the opportunity or taken the time to look into this. So
yeah, right. So, and there's no industry that wouldn't be able to take advantage of the credit as long as they qualified. Right. So again, those two reasons were under capacity restrictions, or if you had the appropriate percentage of reduction in gross receipts. And something Brian mentioned earlier on one of the other credits, we're working with accountants. A similar things come up here with working with accountants because this was a new program. Accountants weren't always taking advantage of it, or weren't sure how to do it, or they just had their normal day-to-day activities going on and didn't need to add something more to their plate. So there's been, it's kind of hit or miss working with your accountant, whether they've been able to help businesses out or refer it out, or truthfully been given some incorrect information that businesses wouldn't be eligible for. I would say it's definitely worth at least having a conversation with somebody who really knows the program to see if you could be eligible. Because again, there's a lot of money that's out there, and never say never, but when's the government going to be sending checks for thousands of dollars back to your business, right? So take advantage of it while it's out there, and at least do your due diligence to see if you're eligible for it.
Great. Any other questions? Brian, anything else to add when it comes to this?
I'd just like to reiterate the point that Keith, and I think something popped in the chat, I can't see that on my screen, was saying about the misinformation. Tax credits are great. It's a new influx of money or savings in taxes to business owners. To some, it's a scary thought. There's a lot of information they just don't know and don't understand, so they leave it there and don't do anything with it. And others try to take advantage of it when maybe they shouldn't, or have misinformation from a lot of different resources that are available, particularly regarding employee retention credits, where there's companies that try to take a percentage out there, and they'll do this for a business owner, and they'll take, well, I'm gonna help you get this credit, but I'm gonna take a third of that credit as my fee. It's found money to the business owner, and it's great, but it might not be the best method. So just my advice is ask a lot of questions, get a reputable person to talk about it, have that person converse with your CPA about the topic, because it's your trusted advisor. Always connect it to. Really important information. Now, I couldn't see the chat that came through, so I think there's another question out there from the group.
Yeah, and I think Alexis asked the question, and I somewhat addressed it, but just to be clear, yeah, there's no business, as long as you have employees, W-2 employees, you could take advantage of the credit if you meet the criteria. So yeah, even I've helped businesses with one employee that for whatever reason didn't take advantage of the PPP loans. So we were able to at least get him a retention credit on his one employee. One thing to keep in mind that I didn't mention before is family members. There's different rules depending on the structure of your business, whether it's a sole prop, an S corp, LLC, however the business is structured. Some of the rules on family members can restrict if you can get a credit on those people. So just be aware of that, because a lot of times I'll see that with a one employee business. A lot of times that could be a family member or relative there. So that was that. Right. Okay. So yeah, that's similar with what you asked there, Alexis, with the ownership and the business owner. Yeah, it's going to depend on the structure of the business. So it's not a yes or no answer right there. We would need more detail, or whoever you're working with would need more detail about that specific business. So the answer is possibly, right? That's what it would be. But that's what we can break down and figure it out. And to Brian's point there, just not to reiterate it a little bit. Yeah, watch out. There are businesses that are charging percentages, but honestly, it depends on it could be in this scenario, one person employee, and the amount of work to figure that out could be more than, let's say, a restaurant that had no PPP loans. You kind of know all the information. It's easy to do, even though they have 30 employees versus one employee. So yeah, having something that working with somebody that charges a flat rate for what the work is, just I think is the better way or better route to go about it, and who you probably should be working with to get the credit.
Great.
So Pat, if there were a couple questions with work opportunity tax credit. You want me to?
Yeah, go ahead.
Quickly here too. Okay.
Yep.
So going back to the work opportunity tax credit, there was a question about, is the program different by state? So it is a federal program. Some of the reporting requirements or information that's needed may vary by state. Again, the point of working with a company that can handle that process and knows all those details will kind of eliminate you needing to worry about that or figuring it out. So again, it is a federal program, but some of the reporting needs and requirements could vary by state. So as long as the program works in all 50 states, then you'd be all set there and good to go.
Keith, I'll jump in and give you one example of that by state that might be important to know. And I'm not sure if you mentioned the amount of weeks that somebody is unemployed and qualifies, 27.5 weeks if somebody was unemployed. That would qualify the business owner for hiring that person for a credit. But in certain states, there's a map. It is actually done through the federal government in the census, where it has empowerment zones, renewal communities, enterprise zones in areas that are deemed, for lack of a better word, they're trying to develop business in those areas based on certain information from the federal government. When they're deemed those areas and you hire an employee from there, that could by itself could qualify the business owner for hiring somebody in an area. And it's not always the impoverished areas you might think that it was designed for, because it's administered through the census. So each state has different areas and different criteria for that. So I hope that helps.
And then the other question was looking to hire somebody for the work opportunity tax credit. So yeah, I mean, if you have no employees, but you're going to be hiring somebody as an employee, as a W-2 employee, then yes, you'd be able to screen them to see if they're eligible for it, but it would need to be within that 28-day window of when they started working for you. I hope that answers the question, Mandy, but if not, either unmute yourself or you can type something else in the chat. But yeah, you can definitely, it doesn't matter if it's your first employee you're bringing on, you'd be able to do it for sure. You did mention something about maybe the accountants doing the payroll. So you got to make sure you have the proper reports in order to submit it. Could be complicated if you are manually doing things or multiple parties involved with getting your payroll submitted, if that was the other part of your question.
Hi, Keith. This is Mandy. I guess what I was asking is, there's a customer that is running the business. He's doing the accounting, he's doing the payroll, everything himself. It's a one-man show. And he's looking to hire. My question, I guess more specifically, I apologize, is does he need to have Heartland payroll set up prior to hiring this person to get a credit, or just within the 28 days?
Oh, okay. Yeah, great question. And yeah, we'd love you at Heartland Payroll, but yeah, anybody who can do the program, as long as you're setting up. So let's say you hired somebody 27 days ago and we set you up on our payroll system today, we'd be able to get that questionnaire out to them, do screen for it, and get it submitted. Was that the question?
Yes, it was, and thank you.
Okay, perfect. Yeah, absolutely. Yeah, if you didn't have something in place, you can get something in place in that time frame and get it submitted. Absolutely.
Anything else? All right. Well, Alexis, I think we've covered everything. We'll turn it back over to you.
Thank you so much. So if just to circle back in terms of if any participants have any questions that they'd like to discuss with you kind of on a more individual basis, thank you, there we go. So can they reach out to you directly? That's okay. Or do you want them to, contact their Chelsea Groton representative? And then I guess it could be either way. Is that okay with you?
Yeah, either way is fine. Yes.
Okay, great for them to find out more information. And for everyone on the call, we are going to make this recording available, I believe, through our YouTube channel, Chelsea Groton's YouTube channel. So you can always rewatch the recording if you missed anything, or if you wanted to kind of refresh your memory on it. So thank you everyone for joining today. And a particular thank you to Keith, Brian, and Pat for all your knowledge and expertise and for this information to our customers. And thanks, everybody.
Thank you all.
Yeah,
Bye now.
Thank you, Alexa.
Have a great day.